Is that? Yeah, that's great. Good question. Come on up, sir. Good afternoon, everybody. If I could draw your attention back to the front, please. If I could ask your attention, please. We're just about ready to get started. Thank you. I love the clinking glasses. Thank you very much. So good afternoon, everyone. I hope you had a really lovely lunch. Let me welcome, and please join me in welcoming our webcast viewers. My name is Andrew Graham. It's my honor to serve as president of the Canadian Club of Toronto for this season, and it's my pleasure to be your host today. Viewers, thank you for joining us, and a Happy New Year to you. This is our 42nd annual economic and political forecast event. Not only is it one of our longest running luncheons, but it's also one of our most popular, as you all attest today. We are grateful to our partner, the National Post, whom we've worked closely with on this annual event for many years now. I'd also like to acknowledge the generous support of today's event sponsors, EY, represented by Eric Rawlinson, and Scotiabank, represented by Jillian Riley. In a minute, I'll introduce our panelists for today's event, but before I do that, and as accomplished and smart as they are, I would like you to spare a moment of sympathy for them. Because if there's one thing that's hard in 2019, it's making predictions about the future. Imagine we had gone back 12 months and we're at last year's luncheon, and someone had stood up on stage and said, a year from now, Doug Ford is not going to be a mayor, he's actually going to be premier of the province. And Patrick Brown is not going to be premier of the province, he's going to be a mayor. Very hard to predict. Imagine if we'd gone back a year and said, England is going to make it to the semifinals of the World Cup, right? Not many people would have called that, especially not many people, I think, some of the more disillusioned fans in England. And needless to say, if you look south of the border at what's happening in the White House and the occupant thereof, if there's one thing he is very hard to predict. So spare a moment of thought with that in mind as our panelists tackle the important issues that we have in the year ahead. First of all, let me introduce Club President-elect Bruce Sellery. He's moderating the discussion. He's a columnist for Money Sense and appears regularly on CBC Radio, Cityline, and Breakfast Television. Joining Bruce are, first of all, Kevin Carmichael. Kevin is the national business columnist at the Financial Post and a senior fellow at the Center for International Governance Innovation. Previously, he wrote about economics and politics for Bloomberg News and The Globe. Andrew Coyne, a National Post and Annual Outlook veteran. Andrew's journalism career has included positions with Maclean's, the Globe and Mail, and Southern newspapers. He's also been a contributor to other media outlets, including the New York Times, the Wall Street Journal, and of course the CBC. J.F. Perrault, he is the Senior Vice President and Chief Economist for Scotiabank. Jean-François has also held prominent roles in the federal government, the Bank of Canada, the International Monetary Fund, and the World Bank. And last but certainly not least, Shauna Sexsmith, who's an investment industry veteran. Shauna manages the Canadian and North American growth equity mandates for institutional and retail clients for Manulife Asset Management. Prior to joining Manulife, she was a vice president and portfolio manager with Altamira Management Limited. Bruce, panelists, thank you much for joining us today. The Canadian Club of Toronto's podium is yours.
Thank you very much, Andrew. Hello, everyone. How are you doing? 2019, it's so exciting. We have two new faces, Kevin and Shauna, JF and Andrew returning. Andrew says every single year, I do not make predictions. Andrew, has that changed?
That has not changed.
That has not changed. No predictions from Andrew. At the Canadian Club, we like tradition. So Andrew will continue to make no predictions. I watch the video every year, so I go back and see what people said and all the stuff. So I want to give you a couple of insights. Some predictions did indeed come to fruition. So the stock market did take a hit. Yes, that happened. A new NAFTA deal was signed, though it was rebranded with some like Village People acronym, USMCA, which is great. JF made a very bold call, and he's like a staid, stoic economist. His bold call was this: Trump will be just as much of a distraction this year as last year. Which is like, you probably had to deal with compliance on that one. That you're like so far out on the ledge on that. Trump continued to tweet, he continued to call into TV shows, he threw extended press conferences, and when that wasn't completely terrifying, it was also kind of funny. So during one of his press conferences in September, comedian Harry Kondabolu tweeted, "I don't want this press conference to end because I feel safer knowing where Trump is at all times." I think it's fair. The musical chairs in the administration continued. Jeff Sessions, Nikki Haley, John Kelly, Rex Tillerson, James Mattis, all out the door. You know what I would pay $1 million for is the security footage of them handing in their security badge. Each one of them, like the last face they ever made as they left the White House. That is footage we do not have. And then there was Stormy Daniels. Let's not forget Stormy Daniels. Remember what happened the day after she gave her explosive interview on 60 Minutes? Do you remember what happened? Nothing. Nothing happened. It would have brought down any president before her, and she didn't even get a reality TV show afterwards. That's how much the world has changed. So those are things that happened that we predicted. There were some surprises. As Andrew mentioned, Patrick Brown was running to be the Premier of Ontario, and then suddenly he was just running down the halls of the legislature, just running away. And now, of course, he's the mayor of Brampton. Trudeau took a trip to India. We wouldn't have predicted that. I don't even remember why he went. It was something, Andrew, wasn't it, about shooting a Bollywood version of Saturday Night Fever or The Sound of Music, because his kids were there. I don't know. But there was lots that happened, and today we will look ahead to our analysis and commentary for 2019. As was mentioned, index cards are on your tables. Fill them out. Just quietly raise your hand. A staff member will circulate. They'll come and hand them to me. I will censor them and look for only the most explosive questions, and then lob them at our panelists. This year, we're going to begin with the stock market because it certainly has been top of mind as we saw the declines for the TSX, in particular through the latter part of the fall. And I want to begin with you, Shauna, knowing that you're not going to make an actual prediction here, but I'm going to phrase it this way anyway. TSX, up, down, flat for 2019.
It's up today.
Yes. Wow.
I predict
Okay.
it's going to stay up for the rest of
Will
the day.
it finish the day up?
Yes.
Okay.
We're going to have
we'll
a good
finish
day
the
today.
day higher. All right.
But we're not out of the woods. The correction that started second half of last year, and especially the last quarter for the U.S. I kind of look at this as a Game of Thrones market.
Ooh, good pop culture reference.
Winter's coming, right?
Right.
They told you that in episode 1 of season 1. Winter's coming.
Winter is coming.
But we're now going into season 8, and it's finally coming. So
there's a lot of blood in the Game of Thrones.
I've got a couple of nicks on me too. But the analogy is that a recession is coming at some point. And so we've been in the late stages of an economic cycle, the late stages of a bull market. We've got all sorts of volatility that happens at the end of an economic cycle and bull market. But that said, bull markets don't end of old age, right? They usually take some other events to get us there. So we're not out of the woods yet in terms of this correction. We're having a good day today, like I said, but I do think we're going to have some more hits into the first quarter, second quarter, trade war worries, economic worries, interest rate worries. But I think by the end of the year, we could be coming out of it.
Valuations. So you're the person on our panel who gets paid to buy and sell stocks,
Right.
and you put your cred on the line every single day
Right.
with what you put in the portfolios that you manage.
Right.
How do you feel about valuations these
They're
days?
cheap.
They're cheap.
Right, like if you've got a longer term time horizon, this is not a bad time to get into the market. The TSX is trading at 13 times expected earnings for 2019. It's got a 3.5% dividend yield. The S&P's at 15 times. So it's not a valuation story that's really taking us down. It really is, it's about all those positive catalysts that drove this market higher for the last few years seem to be behind us, right? So we've had quantitative easing, we've had low interest rates. Well, quantitative easing is over, interest rates are going higher. We've had regulatory reform, we've had tax reform, and now, it's hard to see strong economic growth propelling the market higher for that last little bit. So I'm not trying to be a doom and gloomer and saying the end of the world is coming. It's just winter. Right,
right. It's winter on the Game of Thrones.
That's it, right? But there's no White Walkers, hopefully. But that's what the market is telling you, that it is worried about the next recession, be it in 2020 or 21 or second half of 19. That's what the market seems to be thrashing about.
Kevin, what are you hearing?
Well, I don't know. John and Daenerys just got together, so I don't know. Is it so bad? I mean, I think what am I hearing? It's not so much what I'm hearing, what I'm reading, and I think the robots are going to decide how the markets go in 2019. This wild valuation we've seen in the past.
Is that like a Transformers reference? Is it all gonna be about films this year?
Sure.
Why not, right? Why not? We got to get the millennials involved in thinking about these things. So more pop cultural references, the better. But no, I mean, I'd be very curious to hear what Shauna thinks about this. But you see these ridiculous swings that just sort of this pendulum effect, and that certainly you see this coming out of the hedge fund community, where they're just like they're frustrated in that there's actually no real market anymore. There's not hundreds and thousands of people out there making decisions, sharing information back and forth. It seems to be a smaller group of people making big decisions, and then the passive investing strategies and the robots sort of follow them along. Then big money makes another decision, so the robots and the passive investors follow them back. So I mean, I don't know what the market's telling us anymore, right? So therefore, I don't know how great a signal that is sending about where the broader economy is going. So I'm not particularly confident in that the market is signaling a recession or anything at all. I think the market has really become, as I say, one great big ETF. But that's my own sense, and I'm certainly curious to what people who actually spend their days thinking about this stuff think about this.
So that's one prediction I have, not for this year, but for eventually when there is the next market crisis, serious bear market, people will realize that the robots aren't perfect. And that will be, I think, a bit of a game changer for that industry.
JF, we're going to talk about the economy in a couple of minutes directly, but I do want to include the stock market performance in this question about consumer confidence and the wealth effect. At what point does that start to affect consumer spending? I mean, really, the last couple of months were a bit of a scare. In Canada, there's a whole other, people aren't just invested in Canada, they're invested in lots of different markets. What's your economist view of the market and how that might play out?
Well, I mean, it's this really peculiar situation, right? Because you're in a situation where markets are largely trading out of line with fundamentals. And that really complicates how you think about wealth effects in this context. But generally speaking, equity wealth effects are pretty important. So when stock markets fall on a sustained basis, it hurts.
What does sustained mean?
Well, a couple of quarters. People have to think that the decline that's occurring is long lasting, right? If it's just a 10%, 20% blip, you think I'll get it back next month, it doesn't really influence how you approach your spending decisions. I will say though that in Canada, the wealth effect from equities is far smaller than in the U.S. In Canada, the wealth effect coming from the housing sector is far more important, and obviously there's some issues there. But as we look at developments in equity markets in Canada, we're not particularly fussed about what they mean for growth. We're much more worried about what they mean for growth in the U.S. and how that hits us eventually.
Andrew, one of the areas of intersection on politics and the market is what's going on in the oil and gas sector. There has been a lot of changes provincially. There was a First Minister's meeting. There's lots of questions about the carbon taxes. As it relates to market performance, given that so many of these companies are publicly traded, what are the most important things we should be thinking about politically that connect to those publicly traded companies and their ability to continue to deliver the earnings that investors are looking for?
Well, it's a politically created problem in many ways, that we have a process for approving pipelines, for example, in this country, that it appears to have basically broken down. Not for necessarily bad reasons. We're taking more account of concerns that we might not have paid as much attention to in previous decades, environmental concerns, Aboriginal concerns. But we've got a process now that doesn't seem to have an endpoint. It just, you get an answer, and then it just goes back into the mix, and you have to get another answer. So unless we fix that process, I think there's going to be confidence issues in the oil and gas sector that aren't going to go away. I think the carbon tax issue is much more secondary to that. I think most of the industry has basically wrapped their head around it and are willing to go along with it. But it's the way in which the carbon tax intersects with the pipeline problem. That the federal government has made a big bet on the idea that those two go together. You're not going to get social license for pipelines unless you're doing something on the carbon tax side, and similarly, you're not going to get enough support for carbon tax in parts of the country unless they see that pipelines and that the sector is still being developed. And that big bet, that grand bargain, again, is kind of broken down, at least for now. And they haven't particularly handled the pipeline question very well, and so people have kind of lost confidence there. And they haven't handled the carbon tax issue terribly well either. People kind of, they've been, I think, in many ways too cautious. They've raised the price, the carbon tax just enough, or they're intending to, just enough to annoy people without convincing people it's actually going to make much difference to the environment. So it's easy for critics to say. I think it's a very difficult to thread that needle, to be able to combine those two issues. But until and unless they find some way to do so, I think certainly the evidence you see is a lot of loss of confidence in that sector.
Shauna, how do you buy and sell those names? How do you add that risk layer, the political risk, to your analysis and look over a longer term time horizon and determine whether or not you want these companies in your portfolio?
Yeah, it's one of those things that if we had understood a few years ago just how big the hate on for Canadian and the Canadian energy sector and Alberta tar sands in general, I don't think we would have owned anything. Like the environmental groups that have been attacking Canada's energy sector, they're well funded, they're well organized, they're internet, Twitter, social media savvy, and they're focused on making sure Canadian oil does not reach international markets. That is their end game. They don't care about economic consequences. So I think Alberta and the Canadian producers basically got caught flat-footed. I don't think they really realized the force moving against them. So they've won. They've won at least the first round. As an investor, I have to weigh that kind of sort of negative ESG consequence on those stocks versus real value, and the companies are trading at incredibly low values. Some of them at 2 times cash flow. So my prediction is a couple of things are going to happen. The weaker players are going to get bought out or go private or go bankrupt. The stronger players will get stronger. And eventually this sector will rise, but not without having to answer all the environmental challenges and pushing back a little bit. I mean, at the end of the day, if Canada meets all of its carbon tax and Paris Accord initiatives, it matters not a whit to the global climate change scenario. We are a drop in the bucket compared to the US, which is not part of the Paris Accord, or China, or India, or the rest of it. So, from a long-term investment, good values here, stick with the large caps, the Canadian Natural Resources, Suncor, just don't go playing around with the ones with shaky balance sheets, because we're not through the woods yet on this.
Kevin, how do you think the oil price differential story is going to play out in 2019?
Well, there isn't, or the price differential started to close, right? Alberta finally got around to good Quebec, Ontario economic management and institute supply management in the oil sector. So taking all that volatility away. But I think that idea of a price gap sort of took root in 2018. That's become a trope now. That's going to allow the opposition parties certainly to hammer whoever their opponents might be in government, whether it's Notley in Alberta or Trudeau in Ottawa. And present that as failure of their energy policies when it's far more complicated than that, as Andrew already described in detail. But that's not really going to matter in their various filter bubbles.
JF, Canadian economic outlook, up, down, or flat?
Up.
Up. Oh, you said that with exuberance. Up, like I should know. Up to what order of magnitude and why?
Like you got, up means growth of about 2%. So a little bit slower than what we've seen last year. So the challenge I think people have in understanding what's happening is, we're at the late stage of an economic expansion. Growth is going to slow. It should slow. The Bank of Canada has been raising rates to slow growth. And so the fact that you're going from slightly above 2 in 2018 to something around 2, maybe a little bit below 2 in 2019, isn't in and of itself bad news. Like, this is something that needs to happen. Markets have a hard time wrapping their heads around that. People have a hard time wrapping their heads around that. When growth is slowing, it's viewed as a bad thing. And especially when growth is slowing and you have talk that the Bank of Canada is going to be raising rates or the Fed is going to be raising rates, it just scares people. It makes them think, my God, am I going to get fired? How am I going to afford my mortgage? But every bit of underlying data that we look at, most of the data that we look at, suggests that things are doing just fine.
And
there's lots to worry about.
Okay, I'll get to that in a second, but very strong in the labor market.
Very strong labor market, very strong labor market in the U.S. I mean, in Canada, we have record levels of job vacancies. Where there's like 400,000 job vacancies in Canada. It's double the amount there was 2 years ago. The unemployment rate's at a historical low. Wage growth is not all that great, and there's a puzzle there. But by and large, like these indicators and labor indicators tend to lag the cycle anyways, but by and large, these indicators of activity and the prospective indicators of activity, there's nothing that's pointing to a very significant deceleration.
There's lots to worry about, you said. What's your top three?
Top three, the number one is the trade war with China. Now, we've thought for a long time this is going to resolve itself, and it looks like it's about to, but you're dealing with Trump, and you're dealing with the Chinese, who knows? The other, and this is far more intangible, or far less tangible, is Trump himself. We are clearly going through a period of increased, there's got to be a polite way of saying it, craziness.
Very polite, very polite.
Which is related, in part to his personality, but also in part to the fact that the Democrats now control the House, and they're going to be investigating him. And this is a guy who would flip out when somebody tweeted something about him, and now he's going to have congressional committees investigating every aspect of his life. We've seen this play with him before, which is he's going to go dirty, he's going to go low, he's going to do crazy things, he's going to want to change the channel, and that honestly can mean any number of different things. It could mean, he pulls out of Syria. It could mean that he goes back into Syria. It could mean that he, attacks the Constitution. It could mean that, honestly, everything is possible with this guy. And that's going to create uncertainty and volatility.
So does it feel like that's a bigger variable now than a year ago? Because when we talked, one of the things you spoke eloquently about was how trying to discern what is a distraction versus a material variable on your forecast. Has that become tougher?
It has, because he's taken to, I think he's become more and more irrational and more damaging. So his comments he clearly doesn't understand trade dynamics. And we knew that a year ago, we knew that 2 years ago. The way he's prosecuting the trade war with China is really revealing a deep misunderstanding of how markets work, how economies work. The way he's going after the Fed is another clear demonstration that, he basically doesn't, in a way, respect the laws of physics. I mean, the fact that the Fed is raising rates and has been doing so for a while is because the U.S. growth is strong. He views that as inherently bad news. The Fed is raising rates, so the cost of debt on his buildings is going up, and that's a bad thing. And these kinds of interventions, this incredibly aggressive and hurtful and confidence undoing interventions, they're just getting worse and worse and worse. And at some point, they can't get any worse, but,
who knows what that line is? Yeah. The line keeps getting moved on that front. Andrew, you're nodding.
It's not only Trump. So yes, there's the trade wars he's having with not just China, but with virtually every major American trading partner, or trade wars or trade threats that are damaging themselves to confidence. There's the fact that they're running deficits heading towards 5% of GDP with unemployment below 4%. This is pro-cyclical fiscal policy like we've never seen, and the consequences are, frightening to think of in terms of how that then rebounds into monetary policy, et cetera. If you look in Europe, we've got the real prospect staring us in the face of a no-deal Brexit, which is the absolute worst-case scenario. And at this point, you have to say that's probably the most likely scenario. I mean, doesn't mean it's going to happen, but it means it's certainly a real threat. And again, if you're looking at it from a confidence standpoint, that's got to scare anybody who's investing in either Britain or the rest of Europe. You've also got a government in Italy that's been playing chicken with the European Union. For now, it seems like some measure of sanity is prevailing there. But you know, there's continuing unease about the whole European project and particularly the euro currency part of it. So you've got a number of things that are combining to make, if I were an investor, make me very uneasy about these things. And if they all at some point decide together that this is that they've lost confidence, then we get into a recession scenario. And what really worries me is, in this country, is we've got governments federally and provincially that have essentially, remember that phrase from the financial crisis, priced to perfection. They've priced their budget policy to perfection. As long as there's never a recession ever, then we're okay. But if we do get into recession, then all of these carefully balanced budgets, or nearly balanced budgets, at the top of a business cycle 10 years after the last recession, go into complete free fall. And the fiscal situation is precarious enough at the provincial level. There are long-term projections for the provinces that are really disturbing, that are hard to get off. I mean, I know long-term projections are usually, you kind of look askance at because a lot of things can change, but these are fairly baked in because they're to do with demographics, they're to do with the aging of the population and the healthcare costs, and it's really hard to get off that track once you're on it. And you've got provinces, you know, 3 or 4 provinces, New Brunswick, Manitoba, Newfoundland, 1 or 2 others, that are heading for 100% debt to GDP ratios in the next 15, 20 years, and 200% debt to GDP ratios, you know, 30, 40, 50 years out from that. Doesn't mean it's going to happen, but if you're looking at it, you'd say, that's a really scary number. If you, for reference sake, when Saskatchewan nearly hit the wall in the 1990s, when they were 1 day away from not being able to sell their bonds, they were at, I think it was a 60% debt to GDP ratio. So we've got long-term fiscal challenges, particularly at the provincial level. Everybody focuses on the federal, but it's really provincial. And if we start off trying to deal with that in the short term with a crunching recession, we're in a mess of trouble.
Shauna, I want to ask you the Trump variable, or what's going on in the U.S. that you pay attention to and worry about, and what has you just turned the dial on the television or skipped to another more interesting website rather than listen to the latest tweet storm?
You know, he sucks all the air out of the room. It's just, it's so annoying. When there's real companies, you know, conducting their business, doing good things for consumers, employees, and shareholders, it's all I can say is it's really annoying. The main thing that we focus in on is today it's the U.S. government shutdown, because now that we've got a Democratic Congress in Washington, the story isn't about the wall, it's about how this Congress and Trump are going to, I don't want to say get along, how they're going to battle each other for the next 2 years. And basically, it's a test case, right? If Trump gets his way, $5 billion is meaningless for building a wall. What the Congress is trying to do is build a wall around him. And if they can't impeach him, I think that's essentially what they're going to try and do. So, you know, it may actually be good. Maybe we're going to be stalemated for the next 2 years. It's just going to be a lot more bluster and volatility, but no real damage. That would be my, you know, knock on wood.
And Andrew, let's bring it back to Canadian politics. October 21st, 2019. It is a Monday. Will Trudeau be re-elected this time?
Not a clue, mate. There's so many variables in there. There's no
I like that accent. Was that a reference to Crocodile Dundee?
Sure.
There? Okay.
Let's say it was.
I'm just
keep the movies
okay,
going.
Good.
There's so many variables. What is certainly true is that Trudeau's personal numbers have cratered a long way from where they were. And that's oftentimes the party numbers follow the leadership numbers. So people, first of all, make up their mind what they think about the leader, and then that bleeds into the party numbers. He still ranks ahead of the other leaders on most measures, in most polls, but he's a long way from where he was a year ago, 18 months ago, when he was sailing along, and people were very, very positive on it. So a lot of things have kind of worn thin. I think the India trip was a kind of a crystallization of a lot of those concerns that I think if you probe in, again, if you look in the poll numbers, you go beyond the just approve, disapprove, and you start asking questions that pollsters do about, does he care about people like me? Does he, was he somebody I'd like to have a beer with? All these kinds of questions. I suspect what you'll find is people are concerned is that he's not focused on meat and potato concerns of average Canadians, but is kind of pursuing ideological hobby horses, that he's not the idealistic sort of Prince Hal that they thought he was. He's more of a cynical politician. I think a lot of those things are taking root. And while that's going to happen inevitably to any leader who's had to make tough decisions over time, the Liberals had invested so heavily in his personal image. I mean, they put him on every magazine cover and in every video, more than I've ever seen him. And we have leadership-focused politics already, but this was on another level. And the danger, of course, is that, people fall out of love as quickly as they fall into it. And if people decide that they suddenly don't like you anymore, that can really hurt you. So they've got issues around his leadership. They've got issues around broken promises, et cetera, that are going to hurt them. On the plus side, they've got a conservative leader who is not exactly setting the world on fire. He's bedeviled now on his right flank with the new party of Maxime Bernier, while they haven't got huge numbers in the polls yet, they have done, I think, exceeded people's expectations about how quickly they could get themselves organized. And all they have to do is take enough votes in a few seats to do a lot of damage to them. And the other thing that the Liberals have got in their favor is a very, very weak NDP and a very weak NDP leader. To the point that I think more than a few New Democrats are hoping he loses that upcoming by-election in BC so they can replace him, even at this late date. It would be better than sticking with him, I think a lot of New Democrats would feel. And that's the age-old Liberal strategy, is to try and stamp down the NDP vote, corral the left-of-center vote within the Liberals, and right now you'd say they have a decent shot. Final point I'll say is, just historically, unless there's a recession, we typically don't drive out majority governments after one term. We stick with the devil we know when times are relatively good. If there is a recession, if we have any sense there's a recession by this time next year, by October, then he's in a lot of trouble.
Kevin, what do you think?
I read about monetary policy, so I'm not going to make political predictions. But I will say that just to add to what Andrew's just said, because that seems like a pretty astute analysis to me, I think the thing that's going to trouble Trudeau's re-election bid is showing that he's actually made a difference. I see a lot of first-term Obama in this Trudeau group. Younger group of politicos come in, all the new ideas, want to make a difference, had all that great sort of Larry Summers type thinking behind their economic policy and all that. And then like Obama with Obamacare, they instituted everything and then walked away and failed on the execution. So you see that in the Trudeau case, particularly around the infrastructure program. I think they effectively changed the channel in the previous election campaign by going for deficits and saying, we're at a moment where it's the old balanced budget mantra isn't working. This is a rare moment in sort of economic history where we actually need to invest. We need to go into deficit financing to try to boost productivity, et cetera. So they convinced the electorate of that. Probably aided by the general dislike of Harper by that point, but they made that point. That was sort of the thing that propelled them, at least the policy initiative that propelled them into power. And then they spent the money, or at least they allocated the money. And that's the thing, they haven't spent the money. They have no idea where that money is, or perhaps that's unfair to them, but they have a very loose idea of where that money has gone. It's not hit the economy the way it was supposed to have. I know it sort of was a frustration of the central bank sort of waiting for all this money to hit. It just didn't, it never materialized. You're starting to see it show up now. I think it's probably significant that Champagne was moved to the infrastructure ministry from trade. He's one of these, he's sort of an energizer of money. He does get stuff done. And I think they recognize they have an issue. They're going to need to show people sort of running up into the fall that money's actually being spent and being spent effectively. And I think if they are able to do that, they probably can bring some of the good feeling that surrounded the early days of the government and use that to their advantage to push off, as Andrew said, a relatively weak push from the opposition side. But if they fail to do that, there's a lot of frustration and bitterness out there right now, so they could be in trouble.
JF, I want to ask you about the deficit. Your firm's commentary following the fall update included this phrase. Only a very polite Canadian would have said it this way. Our preference would have been for the government to be more cautious in raising expenditures. Very Canadian way of saying it. What does that actually mean?
Well, I mean, piggybacking off what Kevin just said, one of the things that's happened with this government is that expenditures have been on the rise, even though they've been underspending in some important categories, right? So they haven't been spending as much as they said they were going to on infrastructure, which would have been a good thing had they done so, but they didn't. Yet the deficit kept getting worse and worse because they were backfilling that space with other stuff that was, I guess, politically expeditious for them, advantageous, but for which the economic impacts were really quite limited. So you end in a situation where there's a deficit of $20 billion. I mean, it pales in comparison to what's happening in the US, but still a deficit of $20 billion. You're going to see over the next 2 or 3 years, a significant slowdown at some point, possibly a recession. I mean, there's going to be a recession in the future at some point. Interest rates in Canada are probably still reasonably low by that point in time, given how Poloz is approaching the cycle. So then you're left with a situation where, how do you manage a cycle when growth slows down significantly? Do you blow out a deficit from a $20 billion level to 50, 60 billion, or would it be better to blow it out from 0 to 40? Now, you'll argue it's just 20 billion, it's not the end of the world, but it's, those are difficult things to reverse. So that's where that comes from. And that's done in the context of, them thinking about the election platform, because they're surely going to be offering some expensive stuff in the context of the election, right? They've talked about pharmacare, they've talked a little bit about daycare. So this kind of baseline deficit of $20 billion or so that we see for the next couple of years is probably going to rise significantly in the context of an election, unless they raise taxes very significantly, which I don't think they would do, but at some point they may need to.
Shauna, how do you watch the Canadian political environment, and what becomes interesting to yak about and what becomes important to stocks?
It's sad. It's, Trudeau came in with this huge majority and all this hope, and he squandered it on magazine covers and playing dress up in India and ticking off everybody, India, China, US, and all I can see is a carbon tax and higher personal taxes, and Canadian companies and other Canadians feeling somehow like this wasn't the deal they signed up for. So in terms of our companies that we invest in, I think we're okay. I mean, we can withstand, a sloppy government for a term or so. Interest rates and the fundamentals of the economy are still pretty solid. But as as a headline, it's depressing.
Is there anything Scheer could promise the business community that would make a material impact on the stock market?
It's got to be on taxes, and being able to stimulate, hiring and productivity, and finding some way to reach these climate initiatives without feeling like you're just hammering people. Because, at the end of the day, you can meet climate goals if we're all just living in tree houses, but we're not going to do that. So there has to be a gentler and easier way to take this on.
Andrew, what does Scheer need to do between now and October?
Well, what he needs to do, what he should do.
A two-part question. I love a two-part question.
What he'll be tempted to do, what he'll really be tempted to do is not much at all, and just present himself as a safe alternative and not rock any boats. And I can't say that's necessarily wrong. If people get tired of this government, it will be because it is too showy, too flash, too much this, razzle-dazzle, too much of the Prime Minister in their face, these kinds of things. And it may be that what people would go for then is safe and boring, and Andrew Scheer can certainly deliver that.
Lower taxes, maybe.
But I certainly think there is if he were prepared to be a little bit bold, there is both an opportunity and a necessity for substantial tax reform in this country. The opportunity is, and maybe the challenge at the same time, is the Trump tax reforms, which have closed what had been a substantial tax advantage for Canada, and we need every advantage we can get to try and attract investment here, given all the other reasons people might want to prefer to invest in the United States. So that tax advantage has closed. To reopen it, we can't just slash tax rates because that would have serious implications for the deficit. But what we can do is substantial tax reform, is broaden the tax base, remove a lot of the deductions and credits and exemptions that don't serve any useful economic purpose but just distort investment decisions, use the revenue gained by closing those gaps to cut tax rates, and therefore you can essentially do a revenue neutral tax reform. It's also, I think, and this will go against a bit of conventional wisdom, I think is the more politically saleable way to do it. The conventional wisdom is you don't do anything large, you do things in small pieces. And I think we saw the result of that with the Liberal attempts at the small business tax reforms, where it was very targeted, it was very narrowly focused. And the result of that was two things. One is the people who were having their tax breaks taken away felt very ill-used, felt they'd been singled out unfairly. And secondly, there were no winners from the exercise. There was nobody that could say, well, actually, we're reducing your tax rates. And it seems to me to make these things politically saleable, there has to be a sense that everybody's ox is getting gored. And you have to have enough revenue from closing and taking away those tax preferences, as I say, to be able to cut tax rates and create enough winners from the exercise that politically it's not a killer for you. So the more radical, more far-reaching, more broad-based tax reform may also be the more politically saleable. And if Andrew Scheer wants to do something to really substantively differentiate himself from the party in power, that would be a very good opening for him. I suspect instead it's going to be, carbon taxes are driving up the cost of living, and this kind of small ball, I think, is more likely to what you're going to see from him.
JF, I want to ask you about Brexit. Andrew referenced it briefly. What's the Canadian angle here, aside from the fact that Mark Carney lives in London? Is there something that has this be relevant to us?
So we think of the Brexit issue as largely a financial market issue. The UK economy is large, G7, but it's not so large that what happens there has significant impacts on us or the US. And really that's fundamentally, from a macro perspective, the thing that's most important. It's just like if something were to happen in Canada, it wouldn't affect the UK that much. The UK it's not that much of a difference. The context is slightly different in the sense that London is an international financial center, an extremely important kind of element of the international financial landscape. And what happens on the Brexit has a potential to cause serious dislocations there. And if that were to happen, then you're in this world where kind of this uncertainty gets even worse, as Andrew talked about. You have liquidity runs. You've got a whole mess of folks that are rethinking what the financial landscape might be over the next year or two as money just flees the UK and goes somewhere else. And that, to me, is by far the bigger challenge out of Brexit. And that, it affects Canada, but it affects every other country in the world as well. Right. Which makes it even more.
We're going to move to a bit of a speed round. So these answers are 2 or 3 sentences. Andrew, to you first. Brexit aside, comments on the future viability of the European Union itself.
It defies analysis. They are stuck between moving ahead to full integration and the necessity of that, and the fact that nobody wants to yield enough sovereignty to do that. So they're stuck in the middle in a way that you would not think could possibly work, and yet here they are still muddling through.
Shauna, cannabis, buy, sell, or hold? Cannabis stocks.
I was going to say,
Stock,
it's legal
buy,
now.
Say it's legal. It's perfectly appropriate for people to be talking openly about their use.
Yeah, we're not owners. If that should tell you something. Cannabis is being, I think, traded mostly by retail investors and hedge funds. We've yet to see a profitable market model. It's overvalued for the size of the Canadian market.
JF, will the housing market in the GTA rebound in 2019? Interesting choice of the word rebound, because it really does depend on where you live, whether rebound is the right word.
Well, you're right. Rebound is perhaps not the right word. We think the market's essentially stable. It's kind of found a bottom. Might go up a little bit, might come down a little bit, but we're not in a situation where we think the market's dramatically overvalued in kind of a sustainable price dimension. The reality is Toronto's an expensive city. It's going to be an expensive city forever now. Population growth is just so strong in this part of the country, and it's true in Vancouver, that sustains levels of house prices that are just astronomical by Canadian standards. So we don't think the market's going to fall much more significantly than it is now, but we also don't think that there's room for another 20% a year.
Right. Kevin, what is the number one thing you're watching on the Canadian monetary policy front?
The output gap. So to put that into of terms that more people will understand. I'm watching the extent to which we're in something of a productivity boom, like we were in late 90s, early 2000s, where the economy, the capacity of the economy to produce non-inflationary growth is growing fast enough that will allow the central bank to basically leave things on hold. So that's the main marker for me.
I'm going to ask this first to JF, and maybe Andrew, you'll have a perspective here. What are the implications of the rise of the alt-right globally, Brexit, Trump, Russia, Maxime Bernier, et cetera, on the global economy and the stock markets? And the question asks alt-right, that's the phrase here, but we could also say populism, which is a little less charged. JF?
That's an easy one. Listen, I mean, I think one of the fundamental tenets of the alt-right and kind of this extreme position on both ends is a greater focus on things that lead to immediate gratification or immediate personal interests. So a move away from what is collectively beneficial. And trade and integration is one of these things where we all benefit from that taking place. So to the extent that this movement becomes more and more important and you have a move away from kind of globalization, move away from integration, kind of closing yourself to the outside world, that is fundamentally bad for the countries involved, and it's fundamentally bad for countries that are affected by that. And I think that is, to me, the great danger with kind of this extreme ideology.
Andrew?
Potentially horrific in the short term and potentially a more positive effect in the long term. So horrific in the short term, not just for the reasons mentioned we have a global economy, a very globalized set of institutions that are responsible for managing that economy, and when people start breaking apart or challenging or threatening these institutions, the World Trade Organization, et cetera, it's very nerve-wracking. But broader than that, certainly in the Trumpian incarnation of it, it is anti-knowledge. It's against anybody who knows anything about stuff. Because
pretty large category.
Because that's what it's become. It's become a kind of a class war, class organized not around money and income, but around knowledge and education and training. And in Trump's case, it literally is the case that whatever the experts recommend, he will do the opposite, because that's how he shows them that he's the boss. So that's obviously has horrific implications. The longer term sort of beneficial thing is, as a world economy, we're kind of in the same situation in a way as the EU is. That is to say, we have these issues and these challenges, whether it's climate change, whether it's international financial market regulation, a bunch of things that kind of cross international borders and require a global approach. And what we've done is we've jury-rigged these institutions at a kind of executive federalism level. We have institutions where governments meet and come up with agreements that the rest of us just have to accept. And I tend to support those institutions. I tend to support the arrangements that they recommend, but I can understand there's a serious democratic deficit there. That people in countries, and this is part of what the populism is tapping into, people say, well, I didn't vote for this. I have to do this because the WTO says I have to do this. I didn't. Who elected them? And so the longer term challenge, it seems to be, and it'll sound fanciful, is since we are in this world now where these problems are absolutely transcending international boundaries, they can't be approached in just the national level, and this international model that we've evolved isn't working for people in a democratic sense, at some point we've got to start thinking about global organizations that have some kind of democratic mandate. And that's far off. I'm not saying it's going to happen anytime soon, but ultimately that's the only way I think we're going to resolve these questions.
My last question to our panelists is for a hope or a final prediction. You'll have 10 to 15 seconds for your answer, but before that, one last speed round to you, Andrew, and that is, what is your no prediction for the Alberta election? No prediction. I know you're not predicting.
This is particularly sensitive because I remember writing about that election in advance of the one that Danielle Smith was going to win. And
that didn't go your way.
Regretted it heartily. So if you had to look at it, it would seem extremely difficult for Rachel Notley to pull this out. I think that result looks pretty baked in. But
wow, that's bold. Andrew,
I know you're going to pull this video out when she wins. But
so a hope or a prediction, Kevin. I'm going to begin with you. A last thought for 2019.
That we're back in the, it's going to echo something I just said, but we were back in late 90s, early 2000s, where we are in something of innovation, productivity boom, and there is more growth happening than we realize. Basis for that is if you look at the jobs data, there's a particular category called computer assisted design, which is like left everything else behind. Every other job category is trundling along. Computer assisted design is like going to the moon. Last time that happened was late 90s, early 2000s.
Okay. JF, hope prediction 2019.
My hope is that the US and Canada are strong enough to justify our rate forecasts.
To which?
To justify our rate forecasts.
Okay, to justify our rate forecasts. All right, okay, gotcha. Andrew.
This is a hope more than a prediction, but that checks and balances are restored in the U.S. congressional system, that the Republicans, having signally failed to do the job of holding Trump to account, I hope and pray that the Democrats do, acknowledging that there's a serious risk that he behaves even crazier in response, but I just don't see any alternative. The main threat to the international order right now is one person in Donald Trump and all that he represents, and he has got to be reined in.
Shauna.
Okay, so on that note, my hope is that somebody closes his Twitter account.
That's very tangible, very practical.
But I'm not predicting that. My more banal prediction is that Canada actually outperforms the U.S. this year. We have not done so for more than 5 years. We're at a one standard deviation underperformance, and that doesn't last for long. So I think Canada will have a better year than the U.S., but it's a low bar at the moment.
To our panelists, thank you. A round of applause for our panelists. Outlook 42.
Nicely done.
Andrew, back to you.
Well, thanks all of you. That was certainly a lively discussion, and it sounds like there's no risk of this being a boring year. I didn't hear any predictions that this would be a dull time to be alive. On behalf of the Canadian Club of Toronto, I'd like to thank Bruce for jumpstarting the first event of the calendar year in his usual energetic and engaging style. And panelists, thank you for sharing your insights and expertise with us. Just before we move on, in fact, maybe I could ask for one more round of applause for our terrific panel and moderator. Thank you. Just before I let you go for the afternoon, here's a snapshot of some upcoming events. First of all, on the 16th of January, we have Ray Reddy, who's co-founder and CEO of Ritual, which is a emerging Canadian and Toronto success story in tech, who will be speaking at our podium about reinventing the restaurant experience. And on Tuesday, the 29th of this month, we have the Consular General for Canada in San Francisco, Rana Sarkar, who will be at our podium to talk about innovation and the disruptive impact of Silicon Valley and the Bay Area. I hope you can join us for both of those events. Before we conclude, I'd like to thank MediaEvents.ca, Canada's online event space, and VVC for live streaming today's event. And thanks once again to our event partner, the National Post, and to our sponsors, EY and Scotiabank. And of course, thanks to all of you for joining us. I hope to see you again soon. All the best for a productive, safe, and happy 2019.